Chapter 1 Introduction. The Intelligent Investor is a book by Benjamin Graham, an American investor, economist and professor at Columbia Business School. The book is considered the Bible of investing, and is one of the most influential financial books ever written. In this book, Graham outlines his value investing philosophy, which involves investing in stocks that are undervalued relative to their intrinsic value, and holding onto them for the long term. The book also emphasizes the importance of having a sound investment strategy, rather than relying on stock tips or market timing. Chapter 2 Investment versus Speculation. In this chapter, Graham explains the difference between investment and speculation. He argues that investors should focus on safety, income, and long-term growth, rather than relying on speculation for short-term gains. He also explains the concept of margin of safety, which involves buying stocks at a price lower than their intrinsic value, so that even if the market does not perform as expected, the investor will not suffer a significant loss. Chapter 3 The Investor and Market Fluctuations. In this chapter, Graham explains the importance of understanding market fluctuations and the role they play in investing. He argues that investors should not try to time the market, and instead focus on identifying stocks with good fundamentals and buying them at a reasonable price. He also explains the importance of diversification and how it can help reduce risk. Chapter 4 Portfolio Policy for the Enterprising Investor. This chapter explains the importance of having an appropriate portfolio policy. Graham outlines a portfolio policy that involves focusing on stocks with good fundamentals, diversifying across different sectors and industries, and analyzing each stock individually. He also explains the concept of margin of safety, and how it can help reduce risk. Chapter 5 Stock Selection for the Defensive Investor. In this chapter, Graham outlines a stock selection policy for the defensive investor. He explains that defensive investors should focus on stocks with good fundamentals and a low price-to-earnings ratio. He also discusses the importance of diversifying among different stocks and avoiding stocks with high levels of debt. Chapter 6 The Investor and His Advisors. In this chapter, Graham discusses the importance of having a competent advisor. He outlines the characteristics of a competent advisor and explains how an advisor can help investors make more informed decisions. He also discusses the dangers of relying too heavily on a single advisor and the importance of diversifying among different advisors. Chapter 7 Investment Companies and Investment Counsel. In this chapter, Graham explains the different types of investment companies and counselors, as well as their roles in the investing process. He discusses the advantages and disadvantages of investing through an investment company or counselor and outlines the different types of services they offer. Chapter 8 Taxation, Inflation, and Other Factors. In this chapter, Graham explains the different factors that can affect an investor's returns. He discusses the impact of taxation, inflation, and other economic factors on investment returns. He also outlines the different ways investors can protect themselves from these factors. Chapter 9 The Investor and His Money. In this chapter, Graham outlines the importance of managing an investor's money wisely. He explains the importance of having a sound investment strategy, diversifying among different investments, and avoiding the temptation to chase short-term gains. He also discusses the importance of maintaining liquidity and having an emergency fund. Chapter 10: The Investor and the Business. In this chapter, Graham outlines the importance of understanding the business behind a stock. He explains the different types of businesses, as well as their level of risk. He also discusses the importance of analyzing a company's financial statements and understanding the underlying economic trends that can affect a company's performance. Chapter 11: Security Analysis for the Investor. In this chapter, Graham outlines the different methods of security analysis that investors can use to identify stocks with good fundamentals. He explains the different types of analysis, such as fundamental analysis, technical analysis, and quantitative analysis. He also discusses the importance of analyzing a company's financial statements and understanding the underlying economic trends that can affect a company's performance. Chapter 12: The Theory and Practice of Investment. In this final chapter, Graham summarizes his investment philosophy. He explains the importance of having a sound investment strategy, diversifying among different investments, and focusing on long-term growth. He also outlines the different methods of security analysis that investors can use to identify stocks with good fundamentals. Chapter 13: Investment Policies for Pension Funds. In this chapter, Graham discusses the different investment policies for pension funds. He explains the importance of having an appropriate investment policy that is tailored to the needs and objectives of the fund. He also outlines the different types of investments pension funds can make, such as stocks, bonds, real estate, and commodities. He also discusses the importance of diversifying among different asset classes and understanding the risks associated with each type of investment. Chapter 14: Investment Strategies for the Long-Term Investor. In this chapter, Graham outlines the importance of having an appropriate strategy for long-term investing. He explains the importance of diversifying among different investments, focusing on quality stocks and bonds, and avoiding the temptation to chase short-term gains. He also discusses the importance of managing risk, including the risks associated with inflation, taxation, and market fluctuations. Chapter 15: The Investor and Social Responsibilities. In this chapter, Graham discusses the importance of considering social responsibility when investing. He explains the role of investors in helping to create a fairer, more equitable society and outlines the different ways that investors can use their capital to make a positive social impact. He also explains the importance of understanding the ethical implications of investing and avoiding investments in companies that do not adhere to ethical standards. Chapter 16: Conclusion. In the final chapter of the book, Graham summarizes his main points and explains the importance of having a sound investment strategy. He emphasizes the importance of diversifying among different investments, focusing on quality stocks and bonds, and avoiding the temptation to chase short-term gains. He also outlines the different methods of security analysis that investors can use to identify stocks with good fundamentals. Finally, he outlines the role of the investor in helping to create a fairer, more equitable society, and explains the importance of understanding the ethical implications of investing. Thanks for watching.